Hey everyone, I'm going to bring you 3 Warren Buffett stocks you can buy today and hold essentially forever. But the reason why I'm recommending these stocks is not because Warren Buffett owns them. These stocks have their own merits that recommend them as good investments for the long term, and those characteristics are partly why Warren Buffett owns them. So we're not going to buy them because Warren Buffett owns them, but we're going to buy them because of their own characteristics that I'm going to share with you here in this video. So let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the first company out of Warren Buffett's portfolio, the Berkshire Hathaway portfolio that I'm suggesting you can buy today and hold essentially forever is Visa. And what I've shown here is Visa's 10-year revenue and operating income. And the first thing that should jump out at you is how close its operating income is to its revenue. If you divide operating income by the revenue, what you'll get is the operating profit margin, and Visa's operating profit margin is near the best in the world. There's arguably no other business that generates profitability like Visa does. The business model is so incredibly lucrative. Over 4 billion people have Visa cards in their wallets today. So it spent decades building out this network of people that have Visa cards and businesses that accept Visa cards. And that growth, that investment in that growth will be difficult for any other business in the world to replicate, for any other business in the world to try and take market share away from Visa. If there is to be disruption to Visa's business, it's likely to come from outside. It's not likely to come from one of the other card providers like MasterCard or American Express. It's likely to come from outside of the industry and disrupt the industry overall. However, that still remains unlikely, and that's why Visa is one company, very profitable and likely to be around for several decades, perhaps even a century or more. Another reason why I like Visa stock is because it's not very expensive. I highlighted the excellent business characteristics you're getting with Visa, and Visa is trading at a forward price to earnings of just 24.87. I often say with Visa stock, it's not cheap, but it's also not expensive. It's fairly valued, and buying an excellent business at a fair value is a great deal, in my opinion. And so it's one of those Warren Buffett stocks that I think you could buy today and just put it away and forget about and let it sit in your portfolio and make you wealthier over the next few decades. The next Warren Buffett stock I'm going to recommend is Apple. Apple, I have similarly shown you here its revenue and its operating income. And Apple's profitability is not as strong as Visa, even though total operating income is much larger than Visa. The operating profit margin is not as lucrative as Visa. No business arguably approaches that. Still, Apple at 118 billion in operating income on 385 billion in revenue in the most recent trailing 12 months is a strongly profitable business. The company makes premium electronics that consumers have demonstrated a willingness to pay for decades. Apple has consistently been the more expensive choice among its competitors when you're looking at smartphones, when you're looking at tablets, when you're looking at laptops, when you're looking at desktops. Apple has consistently been the more expensive option that customers have had a willingness to pay. And that willingness to pay, that brand loyalty, has served Apple extremely well and has served Apple stock investors extremely well. Now, what you'll also notice is a little bit of a flat spot here in Apple's trailing 12-month revenue. The last 2 years or so have not been great for Apple. Recent innovations have been more incremental than revolutionary, and investors are waiting for Apple to deliver some more innovation. And that's another reason why I'm recommending Apple stock as one of these stocks that you could buy today and hold essentially forever, is because of Apple's demonstrated capability to innovate, right? We could go back 2 decades, we could go back 3 decades, and you could list off a number of products that Apple has delivered strong innovation on, right? Starting with the Mac computer, then you could think about the iPod, Then you could think about the iPhone, the Apple Watch, the AirPods, and more and more and more, right? The recent product is the headset, which has come out to lukewarm reception from customers, but it's just the beginning. Perhaps they will incrementally innovate that product, make that even better, or maybe in the next 2 years or so, they innovate something through artificial intelligence, which I would argue they're behind on. Their iPhone could really use some enhancements with artificial intelligence. Regardless, that capability is there. And so that's what you're getting with Apple. Not only a business that has over 1 billion installed devices where people own Apple products, electronics, whether it be iPhones, iPads, or Mac computers. There's over 1 billion installed Apple devices worldwide. And that is a strong reason to invest in Apple stock, because those 1 billion devices, they purchase services, and when it comes time to upgrade, they're likely to stick with Apple devices longer term. Even if not 100% will stick around, a large percentage of customers stick with Apple's ecosystem, and so it's likely to be around for decades or more. And like Visa, Apple stock is not expensive, and it's also not cheap. Trading at a forward price to earnings of 23.52, I feel that Apple stock is trading at a fair value. And like Visa, I feel that Apple is an excellent business, so paying a fair price for an excellent business is most often a good idea for your long-term wealth improvement. And the last stock I'm going to mention here is Amazon. Amazon is the least profitable of these companies, but Amazon is on a different business model than the previous two. The previous two companies, they sell themselves at differentiation. They're a differentiator. Apple has premium products. It generates premium profit margins. Visa has the network effect it's built out over decades. It's got that strong competitive advantage. Amazon's competitive advantage is the low-cost provider, being that low-cost provider that offers you products online that get sent to your doorstep within 2 days or less, right? They're getting faster and faster as time goes on, and that's their competitive advantage. That's something that no other business in the world is likely to match Amazon on, to be able to get your products to your doorstep at that price, right? You can get products maybe for a lower price from other providers, right? But you're not likely to get those products to your doorstep at the same cost, right? So customers are looking at that as one transaction. They're buying something and they want that something delivered to their doorstep, right? It makes no sense if you charge them a lower price on the product, but then you have to charge them $5 for shipping. And so it makes the total purchase price more affordable on Amazon. So that's Amazon's competitive advantage. It's the low-cost provider, and that low-cost service to customers is likely what's going to keep Amazon around for decades and perhaps more. And still, even still, it still generates profits, right? It's not a money-losing company. It's just not going to generate operating profit margins in the double digits, at least not in the near term, the way Visa and Apple do. Regardless, Apple or Amazon is still in its growth stages. Even after growing to 574 billion in revenue, it's still got growth prospects in AWS, in reaching more consumers with e-commerce, in advertising, and in grocery. So it's still got growth opportunity, even though it's already at 574 billion in revenue. And like the others, Amazon stock is not cheap, but it's also not expensive. It's trading at a forward price to earnings of 34. In fact, if we incorporate Amazon's growth prospects into the valuation, Amazon is arguably the cheapest one of these three, because Amazon's expected earnings per share growth is much better than either of the two previously mentioned companies. So if we incorporate that, Amazon is arguably the cheapest of these three. Nevertheless, these are three excellent Warren Buffett stocks that you can buy today and just put it away in your portfolio and Look back at it 3 decades from now, 4 decades from now, and see how much your wealth has increased. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.